All right, so let's do a chart. So this is the E-mini S&P, okay? And here is the mark. So we're looking for some type of changes of behavior or some type of action that happens to the market, okay? So this is the S&P, and this is before the down move with the war and everything else, which was kind of an excuse. But let's see if we see anything that we can correlate, and then give the market where we're at now. Okay. So what's the key? Well, the market goes up, and the market goes up, not a problem. Reacts well, makes new highs, vertical absorption, vertical absorption, vertical absorption, vertical absorption. The market comes down here. Now, this is really important lesson today. Okay, I can't stress how important this is. We now get a market that shows some selling. This is not supply. This is long liquidation to the market. How do I know that? Because the range is not wide enough to be supply. The market that comes down, okay, and I mark it only because it reacts up here, not because it's demand, but I mark it because it's reactionary. Boom. Okay? Only because it goes up and goes up to the highs. So I want to react to that little low before the high. Then I get here and I see a little selling, and I see a little selling. Okay? And the market increases. So what do I know? I have a little selling here, and I have a little selling here. Does that make sense? Does that make sense? So it's kind of that reverse absorption. But we don't have supply to the market. But we have market of long liquidation. Long liquidation ultimately may lead to supply or may lead to long liquidation, right? So the CM's got to prevent that from happening. So the market comes down here, selling, selling. Now, this is where people in tape reading, and I told you this is going to be really important for members, okay, for mentoring students. What do you see here? And I'm going to go a little bit tonight. What do you see here? You see a market that has selling, correct? Not supply. Look at these two bars. This is not a bullish bar. Okay, why? This bar right here is effort result. A lot of effort to try to go up. Now you can say, well, Gary, it's stopping the action to the downside. That's possible, right? Because I haven't had supply. But since this was the highest volume at the time, I'm going to mark this. So far, so good. So little long liquidation is selling. This becomes adverse result. The market, 2 bars cannot go back up to 1 bar. That's a negative. Okay? But is it a sell signal? The answer is no. You just don't have distribution because you have a couple bars of a story. Okay? So we go up and the market sells off. Pretty common. You're not going to buy this market here. You want to wait for the rally. Again, volume matches the day before. Range is about half the range. Again, effort result a reaction. We need to go lower to find true demand. It's not true demand. Low end, selling, selling, not supply. Not supply, not enough. I mean, range is a little bit wider for supply, but definitely long liquidation. But the difference also not supply is you have a little shortening of the downward thrust, don't you? How? 1, 2, 3, 4 bars, 4 days. The market made less of downside progress. Okay? Fine. Again, we want to watch the reaction. Correct. We want to watch reaction. Market goes up, a little buying here. We go up, and then we form the up thrust of the market. Now, we move our line down here as well, because this is the widest bar with the largest volume. Remember we marked those bars? Largest range, largest volume. We take this across. For sure, won't get this anywhere. So I'm going to show you. Boom. Goes up. Sells off. Tries to make it the top. Sells off. So we know the market's just not ready. So the market has to go lower to go higher, right? To find that true demand. We form a particular spring. Boom. The spring has to make new highs. It does. Yay. Okay. Little vertical absorption. What can you tell me about these bars here? What can you tell me about these bars right here? What those bars tell you? What those bars tell you? So, you have low end closes, right? You have low end closes, right? Not what you think for absorption. What's this part? What's this part here? First result. Bearish? Not really. Potentially bearish? Yes. Take that market across from here. Since this market left, some people ask a question about lines, okay? I'm going to clear that up for you. Been clearing up and mentoring people. If you guys haven't done mentoring in a while, please get back to me. Boom. Market leads the trade range. Doesn't need demand. Trend is up. Buying overtakes selling. Boom. This is the line in the sand to the market. Do you see that? This is the line in the sand to the market. Okay. Right? Market bar. Okay. Sorry. Supply, selling. In an important area of demand. The background, yeah, but it's not really weakness, right, until we get that supply, right, Elizabeth? It's not really weakness until we get that supply, right? Market comes. After selling, what's this? Stopping action? Maybe, this is really important, maybe on a short-term basis in your mind, it's shopping action. But the story is this. They're selling tails. You see them? Without supply. They're selling tails. So the story says maybe distribution if we get supply. If it's not supply, then it's just a matter of the market going higher. Correct. So we could get up. So we have to wait, right? We have to wait, right? Now, comes up, selling, lack of demand, boom. So here's another thing, short-term versus, is this a spring to buy? Okay, let's assume it is. Let's buy that spring. Okay, buy a spring, because it went lower and found demand. My stop is right here, correct? Underneath the reactionary low. No, I'm just calling it out there, okay? Right, recovery weakness rate should fail. But let's just see what happens, right? Good thought process. Let's suppose we bought it. More expensive people would not, but some people would buy that, right? Oh, look at that. Look at that. Okay? So you're long from here, and now, if you're a trader and scared, your stop becomes right here. Because this is distribution, it's really important. Distribution, this gets taken out to the downside. So we want to keep a short leash on that, right? What do you notice about those three bars? It's a shortening of the thrust. Yeah, we went over this a little bit today, right? But in more detail again. Right. One bar, boom. Would you buy that spring? Would you buy that spring? Look at you guys. Look at you girls. Look at you people. You know how many people would know this? Do you know how many people that will interpret the way you're doing it? Probably 1-2%. Gary, it's a spring, buy it. Go ahead. So people, especially ask me about the weakness in the background. Do you see the weakness in the background? The potential weakness in the background? Yeah. If you're long, let it clear up a little bit. I'm telling you, nobody reads a tape like this. Nobody. You can search and search it, you won't find it. You will not find it. Because David Weiss and I were probably the only two people. David didn't go detail with this, okay? Because they're a little different, right? And I'll explain to you down the road why, okay? Boom. Would you sell this? Would you sell this bar? Yeah. Stop. Do you have enough? Do you have cause? Yes. Do you have the market that's on the right hand side of a trading range? Yes. Let's go. Congratulations. No, but remember, two guys a point. Remember, your background's negative and the market acted negative. Very good, right? Now you have a situation where you're short in a longer term uptrend, but you have distribution to the market. Do you notice anything about this bar? Tell me the last bar. Good. The setup to me is that this is shorting the upward thrust that ends like this. Here's the question. If the bar did this, it made that thrust, would you say that? Of course you would. The market was so weak, the market didn't even up thrust. Makes sense, right? If I showed you an up thrust, turn the cards over, easy. The fact that it did not up thrust, very critical, right? Right? Excellent. Boom. Right, you don't up thrust, right? Would you buy this bar? I can't explain how important this is. Would you buy this bar? By the way, in the mentoring, we got a lot more stuff going on with this stuff. Would you buy that bar because after the result? Correct. So you want to cover a short because it's short of thrust and make it a reactionary rally, go ahead. If you're going to buy this market but you have no accumulation, no. Would you buy that? This is important. This is right-hand side markdown. A very large volume, very large range. You would not buy this bar. Except for a scale, you might. No, it could be. You buy this bar, right? I mean, you would this bar. What does this bar? This probably begins. You mark the bottom bar, don't you? For sure, right? You mark the high? No. What do you expect? Well, low. Breaking of the ice. Trading range. Left-hand side of new trading range. Because it's going down, and the market reacted back up. Make sense? Important, really important. Right? It's the market is marked down. The first reaction is the left-hand side, or phase one. Phase one. Bullish or bearish? Nothing. Rest day? Nothing. Probably okay, more friendly than negative, then we go down, but okay, maintain the gains, but okay. Do you have an edge to buy? What's happening? This is how you read tape, folks. I'm telling you, this is how you read tapes. What's happening? Back at filling. What happens when the market starts from the left-hand side to the right-hand side? What happens when the market goes from the right-hand side, rallies back up, and retests? The transfer risk is correct, but also what it also is, it's the sausage being made. It's the left-hand side volatility and everything, beginning a new story to the market, right? Beginning a new story. Correct. Spacey beginning. Correct. Fantastic. Great, understand, okay? Boom. Market does this. Low end closes. Nothing to write about. Closes do not matter. Closes do not matter. Okay? On the left-hand side, we're building cause. Can you take a position here? Either long or short position-wise. Can you take a position? Do you have an edge on a scalp? But a position trade, not a scalp, a position trade. The answer is no. You have to get to the right-hand side of the market, right? Or your phase D or E, right? It's your phase A type of thing. I'm only doing because of correlation. What is this? What's happening? What's happening? It's short cover, right? Because it's beginning of it. It's the middle of it, right? It's phase A going to phase B. What's happening? This is shorting the thrust, Elizabeth? This is shorting the thrust? This one? Which one is shorting the thrust? This one, this one, this one, this one. The last bar, yes. And all of them is correct. All of them correct. Right? Shorting the thrust, the last bar. This whole thing is shorting the thrust. Each bar gets shorter. All correct. Vertical absorption. Hey, Charlie. Vertical absorption. Vertical absorption. Okay. Vertical absorption in a bullish market. Lack of demand when you come from weakness. Right? Sorry, that's the pug snorting. Okay? Understood? Right? Volume doesn't really decrease as the market. What would make this bullish? If the volume started to decrease on each bar, then it wouldn't be F reverse result, right? Then it wouldn't be F reverse result, would it? If the volume decreased, so if this was up 100%, 100% volume. This was up 80% of volume, 80% of volume. 60%, 60%, 30%, 30%. If the volume and the range matched, then you could go out and buy that market, correct? But it doesn't. But it doesn't. The power of using Wyckoff with volume and price, it doesn't. It's a shortening of the thrust. Did we draw this line in advance? Of course we did. We show our work. What can you expect? Can you sell this bar here? With a stop here? It's aggressive. It's aggressive. Who would do that? This is more advanced kind of stuff, right? I know don't trade without an edge. But to an experienced trader, this is a potential edge, right? What can you do? It's aggressive, right? Congratulations. Congratulations. Do you hold or get out? What's your expectation in the market? Do you hold or get out? What's your expectation in the market? Continue lower. What's your expectation, though? What do you expect? Elizabeth, very good. Very good. Your expectation lower, right? Maybe the possibility back down to the bottom of the range. Would you buy that? No. Buy that? Stop breaking. Or you stick with your position. See, it's very easy to cherry pick things, right? Did you buy that? Here's the key. Here's the key. Does the volume come in for buying? Not really. It's a retest of the area here. Here's your decision. Is this action here bullish? Under accumulation of buying, or is it bearish? That's your question, right? That's your question, right? Is it bullish or bearish? Now, the good news is your stop is up here, you're building more calls. I agree with you. I agree with bearish, right? Because demand doesn't come in when it should come in. You can flip all the cards over. The situation of movie, I think, of To Tell the Truth or something, or whatever. Turn the card over. It's a kiss of, right? I call it a kiss of death part, right? David Weiss would put a wad of peanut butter on there. A wad of peanut butter. Not my term, David Weiss's term, but it's a great term. You put it with something change behavior-wise, boom. I call it the kiss of death. The Black Widow. You're still short. It's okay if you have direction, right? No volume, no demand. Boom. What's this? Remember we talked about the left-hand side of the trading range began here? The left-hand side of the trading began here? Would you liquidate this on the spring? Bullish in the long run, or retest? Patient. Closes are different. Boom. Kind of lack of demand, not running away, but not selling. Another test. Why does market hold here? Why do we hold here? Anybody? What is this? What is this? Shortening of the thrust. Effort result, right? Expect a rally. Current chart. What you see? You don't see a shortening of the thrust, do you? You see the bar volume dropping off. The ranges are pretty good. What do you see? Do you have costs to move up or down? Does it make sense? Does it make sense? Now, what's a way to determine if the market's overbought or oversold? What are the two ways that we determine if the market's overbought or oversold? Anybody? Risk trend line, what else? Point and figure. Let's draw our lines. Why would I draw this line? Why would I draw this line? Why would I draw that line? This is not really a mark bar. Because I want to connect. It's trial and error. I want to mark areas. This is a reaction. Nothing really connects. I can't make it too steep. But a 45-degree angle, right? I can't express to you how important the stuff you went over in the tape reading. That will keep you out of trouble. I can't explain to you. This is unbelievable stuff. There's more, but I want to show you that. Now, we put ourselves on a limb because that's what we do. What do you expect? Say it's a roulette table, right? Not a roulette table. Write down the date. Keep it up. Obviously, with mentoring, we have more time. If you understand how to read the tape, if you understand how to read the tape, you got the game by the you-know-what. Why? Why do I say that? Why not go with the moving averages? Why not go with all the sophisticated data that Wyckoff can use today? Right? Why? Why keep it as simple as we do it here? Why? Why can't we glean as much information today from markets than Wyckoff did back then? Wyckoff talked about all those things, but they didn't have the moving average and all that stuff. How? Yeah. Right? Why? So Wyckoff had. So Wyckoff had. He didn't have a computer. He didn't have anything. Small nuance in reading the tape will give you answers. I don't have to prove that to you, do I? So, let's talk about this a bit. So we had the, I don't know, COVID or whatever, and then we had this little Russia war. Last 2 weeks. Marco's right about here. Marco's right out here, right? The market actually went up since the Ukraine thing. Why? Why? Market doesn't care. Well, no, you just what? The market just corrected. It's not a big deal, right? I just show where the high was from. By the way, if this makes a new high, this becomes a terminal spring, right? Someone mentioned about terminal spring. We don't know what it is yet until we get above here. Okay. So, still going from area of support, area-wise, right? Makes sense? Do you have an edge here? So if I do the whole edge, as mentioned, where's my edge? Trade range, right? So sometimes you see a trade range, you scroll more, and you'll see something else.